What is up guys, my name is Ignas, welcome back to the channel. Today we are taking a look into another semiconductor company, Intel, ticker symbol INTC. The stock hasn't been doing so well recently, though it's still up over 10% for 1 year. Back in April we saw a 52-week high of $68.49, but after that the stock has been continuously going lower, with a 52-week low of $45.76. The stock seems cheap at first glance with a PE ratio of 9.87, and they are paying a decent dividend, currently at the yield of 2.73%. But is now a good time to be buying into Intel? To figure that out, first we will take a look into their third quarter results, then what their Mobileye subsidiary is about. After that we'll check into fundamentals, then what Superinvestors are doing with the stock. I will share my own position in Intel on eToro, and lastly we'll check into the technicals of the price chart. The timestamps are available below, so you can jump straight to the part that you are most interested in. But first let's make a small review of what the company does. So Intel designs, manufactures and sells essential technologies for the cloud, smart and connected devices for retail, industrial and consumer users worldwide. They offer platform products such as central processing units and chipsets, and system-on-chip and multi-chip packages, and non-platform or adjacent products comprising accelerators, boards and systems, connectivity products, and memory and storage products. The company also provides Internet of Things products, including high-performance compute solutions for targeted verticals and embedded applications, computer vision and machine learning-based sensing, data analysis, localization, mapping, and driving policy technology. It serves original equipment manufacturers, original design manufacturers, and cloud service providers. So Intel reported their third quarter earnings on October 21st, and their shares fall because component shortages hurt the personal computer chip business. So on October 21st, the price closed at exactly $56 per share, and then the next day's close was at $49.46. This suggests almost a 12% drop for the day. We still haven't recovered from that drop, as the price is now still down for over 9% under those pre-earnings highs. So on top line, they reported $18.1 billion for the quarter, just under the $18.24 billion that was expected by analysts. But they clearly beat on earnings with $1.71 per share versus the expected $1.11. Revenue was not in as expected because the PC sales were down primarily due to lower laptop volumes because of the chip shortage, and that those customers may have lacked other parts it needed to finish assembling their computers. But they do expect that supply chain issues will diminish, and these problems will eventually be sorted out somewhere around 2023. The pandemic brought in more consumers who want to work from home, but analysts think that this PC surge may be coming to a close as sales slow. On the other hand, the CEO of Intel thinks that the personal computer business is now structurally larger, a million units a day kind of business. Another interesting take is that the company plans to shift its business model to become a manufacturer or a foundry for other chip designers, in addition to continuing to design and manufacture its own processors. That should be expensive but also extremely lucrative, as Intel predicts that the semiconductor industry will double in size over the next 10 years. Going further to 2022, they have an interesting plan for their Mobileye subsidiary. Intel plans to take self-driving car unit public in the US in mid-2022. So Mobileye is a company working on autonomous driving, and Intel bought it for $15.3 billion back in 2017. And now the plan is to take it public through an IPO somewhere in the middle of 2020. Analysts predict that Mobileye would be worth around $50 billion. So that is over a 3x increase of what they paid back in 2017. Even with the IPO, Intel still plans to remain the major shareholder, and that should bring more value for current holders of the Intel stock. Now let's switch over to Intel's financials. So these are the revenues for the trailing 12 months of the last 5 years. Back in 2016, revenue was at $57.9 billion. Then in 2017 it was at $62 billion. 2018 was at just under $70 billion. It didn't change much for 2019, staying at just over $70 billion. 2020 was at $78.1 billion. And we are recently moving flat, currently at $78.5 billion. So the company did report the most quarterly year-over-year growth back in the first quarter of 2020 at 23.45%. 3%. But for the next 7 or 8 quarters, revenue is now pretty much flat, just over $19 billion each. And for the last 4 quarters, we're even seeing a small decrease in revenues. Now let's take price to earnings. So back in 2016 it was at 15.64, then 2017 it decreased to 11.95 as the price was going up a bit, so were earnings, and the PE went just a bit to 13.55. Then in 2019 it again decreased to 11.45. In 2020 we already had it under 10 at 9.85, and with the price under 50 the PE is also lower at 9.63. So at least in the last 5 years the price has been increasing consistently, though the growth is not really huge, and earnings was also increasing, which led the PE ratio slowly decreasing over time. And right now, with it being at 9.63, we pretty much have it lowest it has ever been in the last 5 years. Now let's take shares outstanding. So back in 2016 it was at 4.9 billion shares, then in a year it decreased a bit to 4.8 billion. In 2018 that was already at 4.6 billion shares, 2019 4.4 billion, and in 2021 we are now at 4.1 billion shares. So in 5 years we went from under 5 billion shares outstanding to just over 4 billion, which means that they bought back around 1 billion shares, or around 20% of the company, which I think is a great way of bringing value to investors. But Intel is not only doing buybacks, but also paying a quarterly dividend. As we can find in the last 5 years, they have been steadily increasing on their payout, which is now at $1.39 per share. So back in 2017, the dividend yield was at 2.82%. Then with the price increasing in 2018, we had the yield of 2.45%. Didn't change much for 2019 at 2.42%. Then in 2020, we had the price spike and the yield went lower to 1.91%. In 2021, we started with 2.26%. And this year, as the price was slowly going lower, the yield is now at 2.73%. So in the last 5 years, the highest yield that we had was at 2.87%, and that is not far off of what we have today, meaning that buying at $50 would give us a comparatively high yield of 2.73%. Now let's check where analysts think the price should be for Intel in 1 year. So there are 40 price targets of analysts for Intel. They range from the lows of 40 to the highs of $80 per share. The average is at $55.02, and the current price is now at $50.90. This means that there is around 8.1% of room for the price to go up next year. But if we take a look into the earnings estimate, analysts predict that Intel will bring $3.07 per share, where this year it is at $5.28. If we assume that the price to earnings remains the same, that would lead into an unfortunate 30% decrease in the share price. So what are super investors doing with the stock? Currently we have 5 portfolios where they added or started a new position, and then 2 where they trimmed. For example, Third Point currently owns 9 million shares, and they reduced this position by almost 36%, meaning that they previously owned almost 14 million shares, so that is a reduction of 4.8 million shares, which at the current price of almost $51 per share makes it a reduction of almost $250 million. On the other hand, there was some buying pressure. For example, Fairholme Capital now owns 418,000 shares, on which they more than doubled down at 165%. But even with this huge addition, the whole position is still only at $21.4 million. So even though there is more separate adding being done, large holders are reducing on their positions and putting much more selling pressure than these smaller funds. But at least there is some positivity that insiders are showing. In the last 6 months there have been 13 long transactions for a total of $4,745,000, and only 7 sells at $769,000. This means that insiders bought 6 times more of the stock than they sold, and if insiders are net buyers, then at least that provides some confidence going further. So Intel is currently one of the smallest positions from our eToro portfolio, and if you would like to check what other names we got, you could definitely do that by following the first link at the top of the description. I bought it on November 18th for $100 at an opening price of $48.99. The price is now a bit higher at $50.84, which means the position is at a profit of 3.80%, and that makes the value of it at $103.80. But I have already set a take profit limit at $51.50. We will try to find out why it's there by looking into the technicals. So this is the Intel's chart. There was a huge spike on December 7th, where Intel announced the upcoming Mobileye IPO. The price went to the highest of $55 per share, reaching our second resistance price target. But in the next 5 trading days we only had red candles, and the price quickly came back to the familiar $50 range. As we are currently at $50.80, we are also at the 50-day moving average, and that could prove to be a good resistance going further. If we check the MACD lines, we could expect a bearish crossover from those two. So that is why I added that take profit limit, and we'll be looking to buy back as the price moves even lower, somewhere closer to that $48 range that is now set as our first support target. So now let's do a quick recap of what we learned. Recent earnings were not great, they missed revenue, and even though the company predicts that demand for their products will stay elevated, analysts on the other hand have a different opinion. Their investment in Mobileye was a success, and with the current popularity in autonomous driving technologies, the upcoming IPO should have a lot of investor interest. Starting from 2020, revenues have been moving sideways, and few most recent quarters it seems to have been even going lower. On the other hand, earnings are increasing while the stock is pretty much going nowhere, which leads to the lowest price-to-earnings ratio in the last 5 years. Intel is buying back a lot of their own shares, and in the last 5 years that was almost at 20% of all outstanding shares. Even with those buybacks, they are consistently increasing and paying dividends, and the yield is near to highest in the last 5 years. Unfortunately, analysts do not predict much growth, as for next year the price may go 8% up or even still 30% down. Currently, Superinvestors are net sellers of the stock, but there is bullish insider activity, and they are buying 6 times more of the stock than they are selling. The recent breakout in price was quickly sold, and I think the moving averages will keep pushing the stock down, back under to at least $50 per share. So I think my first support at around $48 will be where I start adding money into the name. And that was it. If you got value or new ideas, then make sure to push that thumbs up, it helps the channel a lot. So what do you think, should we be buying or selling Intel right now? Share your stance on it in a comment below. If you are by any chance interested to know exactly when I buy or sell any stock, then consider memberships. By becoming a member, you will get access to Discord, where I share my stock watchlist and all the buys and sells exactly when I do them. This could be a great option to track my moves closely. I've previously did an analysis on another semiconductor company, so if you would be interested in that, then click on a video that is currently on the screen. And that was it from my side. Merry Christmas, and I will be seeing y'all in the next one.